Should you buy or sell first in Ottawa? 5 years ago, this was an easy question. Now it's not so easy. It depends on your finances, where the overall market is, and if you get it wrong, you could end up with two homes or potentially not getting that home that you're dreaming of. Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I'm joined by David Warren. We're Level 2 mortgage agents, and we're back. David, how you doing? How's the week? What are you up to?
Doing well.
What are you doing?
Well. We were saying just before coming on, I've been a little sleep deprived. Was away with one of our banks in actually Whitehorse, Yukon, where it was 24-hour daylight, which made it very difficult for sleeping and really messing with the usual rhythm of sleep and eat patterns and all of that. Trying to get used to it for a few days, but it was it was great though. It was great to see a part of the country that never would have gone.
What was the experience like? What was the highlight of the experience? And if at any point you learned about their housing market, what did you learn? Let's give everyone a little tip of the fire hose here of a part of Canada we don't speak of much on the show,
Yeah, coolest part probably flying over some of the glaciers and ice fields, kind of, northern Whitehorse and into Alaska. So that was pretty neat, pretty cool experience. Bringing it back to real estate. They don't have enough, which is kind of funny. They are actually in a massive housing shortage. They have to wait about a year for any new product to come on and they're just, nothing is there. Their average home price is $650,000. And their main shortage is due to, they're getting 100 new immigrants, people moving to Whitehorse every month. And that's primarily driven by their speed at which they're able to process new immigrant paperwork. So I guess it's out there, instead of going to the major city centers like Toronto or Vancouver and what have you, they're going to these northern areas where they have to bring in all the materials for building. It's all above ground, so they all have everything's on diesel generators, and on all their plumbing is above ground because they can't be below from a freezing perspective in the winter. It's minus 30 to minus 60 every day, and so water. They can't have plumbing underground, and it's kind of this system that pushes and pulls water back and forth from the city and municipal services and whatnot.
Yeah.
So it takes them a long time to build the homes, but they also have to truck in everything, including every day 2 tanker trucks of diesel fuel to power the 7 generators that fuel the city. That they're at a constant electrical shortage on a regular basis as well. So yeah, it was pretty interesting to learn from that side of things on the housing front and kind of what's driving their economy. But I was pretty surprised, at least in Whitehorse, the pricing for things was a pint of beer was actually cheaper than in Ottawa, which is kind of funny.
Wow.
I was expecting it to be a fortune.
$40, a beer, $5.
Yeah. I mean, their meals weren't anything crazy either, kind of in that mid-20s for, a burger platter kind of thing or char, things like that. But a lot of people do grow their own fruits and vegetables. They hunt all their own food. So they live off the land a lot more than going to the grocery store. A lot of have greenhouses and things like that. So they've kind of taken that, where instead of reliant on grocery and other major corporations, that they're able to farm it themselves.
Yeah, I mean, that's what Canada used to be. You live off the land, you hunt your own food, and you get your pelts on your back, and you keep moving.
Yeah.
Funny story about Yukon, a little history as well. My great grandfather, Percy Stevenson, actually went up there during the gold rush and opened the first CIBC branch in the Yukon. I have a book actually called The Yukon Adventure that explains all these crazy stories. And to your point about the 24-hour sunlight, in the book they talk about basically being at the bank overnight and people coming after the bar 2 a.m. knocking on the door looking for money basically at the bank. It was just funny. They had it was basically a gold deposit where they'd store all the gold and then they'd ship it back, But anyways, very interesting book, The Yukon Adventure. If anyone's looking to find it, I don't even know if you can find it. I have a single copy that he gave to his son after it was released, I don't know, 100 years ago or whatever it was.
The tour company that we're using, they'll actually still accept gold.
Awesome.
And they do have one guy that does pay in gold, and he'll call them and tell them the good time to sell it.
Well, there's been a few of those recently. So
yeah.
So Dave, last week the Bank of Canada held rates. I think that was kind of expected. I think we all kind of assumed that was going to happen. The Fed in the US is kind of having their announcement today. I think the expectation is 99% they're holding rates as well, but it's more like what's the sentiment going to be with everything that's happening overseas and oil price being down and so on. Oil today, I think, is under, I think it's $75 a barrel, $77, like way down from a few weeks ago when we were talking. It was $115 a barrel. So bonds are sitting around 3% right now. I think just above 3 when I looked this morning. We're seeing things kind of balance out. Where do you see this kind of going in the future, and any kind of takeaways from the announcement last week?
Yeah, I mean, the announcement last week was kind of Tiff Macklem was basically stating that they could go up in rates, they could go down in rates. There's a lot of things that could impact that from whether things get sorted out in Iran and with oil, and whether that actual peace deal actually comes to fruition, or whether the high oil prices really start to have a ongoing generalized like inflation effect, which would, if that continues to surge energy prices and this MOU of peace treaty kind of falls through, then like that would lead to oil prices spiking back up and kind of prolonging things. We're over 3 months now into this thing. The worry about it trickling through and having broad-based persistent inflation is like the concern. And so they're really watching that. They're watching what happens with Kuzma. Like, we saw last week as well, after we recorded, Donald Trump say that he was going to be canceling it. When he says cancel it, though, it's something where we all have to understand that, yes, it's up July 1st. However, it's like a 1-year wind down period. And that wind down period can continue and evolve as well. We'll see what comes out of the G7. There's the G7 going on right now where, Canada and US are speaking. They've had several, meetings, not official, but, this morning they were saying that Trump and Carney have spoken 7 or 8 times already on a broad range of topics, including the Chinese auto, things like that are kind of big sticking points or issues. So there's a lot around that Kuzma talk. So these are all things that Tiff Macklem in his speech about the Bank of Canada rate decision was kind of, really speaking about. It could go up, it could go down for a myriad of reasons, but going through the different reports, looking at Rob McClister's article on Mortgage Logic News, like he was, speaking about going through a number of the financial institutions' forecasts for BMO, RBC, CIBC, Oxford, Desjardins, TD, et cetera. That pretty well predominant, all of them are expecting holds on rates through 2026. And some, maybe a hike in 2027. Again, I think that's so far out and there's so much that can happen between now and then. If you look at what's caked into the market of expected target rate on the public market, it's all the way through to October is, effectively a no change. In December, the market is thinking a potential hike in December 2026. But again, that's still not a clear cut, but there's a lot that can happen between now and then. So really at the end of the day, it boils down to really, unfortunately, just having to continue to wait and see. Like you said, we've seen oil come down quite a lot. We talked about last week of them, oil and the bond market really moving in unison.
Yeah.
And so, we've seen oil come down now to, I think you said just below $75, but we're still, where we were in 3 months ago in March for the bonds, we were at 2.75. We're still at, I think we're trading at 301 right now. So we're still well over where we were 3 months ago when we saw, rates in the high threes. So I think there's, something that I kept hearing this weekend about is, yes, it's going to take a while for bonds to come down, but there's also that, other side to it, that gas prices at our gas station, when oil prices go up, they're quick to bump the cost per liter at the pump, but slow to bring that price down, kind of that caking in the margins, caking in profitability, things like that. So I expect kind of similar, that we're not going to see like a fall off the cliff of rates as oil comes down and even as oil starts flowing, that it will be like a slow trickle, and it will be kind of also just looking at a movement in the market. We did see one bank that has been hyper aggressive at a loss leader buying market share, that they've raised their rates dramatically because they finally had to shut off the taps. So again, we'll be seeing if others kind of say, you know what, we were losing market share. Now they've come down. Yes, we're making some higher margin, but we're going to like open things up. I guess we'll really kind of coming out of the G7, and whether this actually gets ratified with Iran will be telling as far as, I think, what kind of is to come. I think a lot of economists said it'll, similarly to any Bank of Canada rate change. It's like takes 6 months to ripple through.
So yeah, very good points, Dave. I think one big thing too that is happening in the market right now, I think with regards to bonds and just the overall kind of like economic sentiment is there's a new Fed chair that's come into power in the US. Most people probably aren't following US politics, although I think the stat is they follow it more than Canadian politics. But Kevin Warsh has just been appointed. I think it was 2 months ago. Jerome Powell's out. So today is kind of, there's a lot of uncertainty as to what his kind of forecast moving forward is going to be, right? Like we've heard Tip Macklem, we've heard all kind of what they're expecting in Canada. But what happens in the States, as we know, like directly impacts our economy here. And historically speaking, he's quite hawkish. Like he's usually more conservative, but everyone, you kind of feel if Trump has appointed him as the Fed chair after appointing Powell, who is, kind of historically hawkish as well, the understanding of the feeling is that he's going to be a bit more dovish. Now, is that going to happen? We don't know, but this is his first announcement today, the first meeting. As I said, there's like a 99% chance they're going to hold the rate. However, what he says about what they're expecting is going to have a huge impact on the markets, the global economy, right? The thing with Warsh is that he believes that the AI revolution, like what's coming with all the AI companies and so on, and the growth of that market is going to be deflationary. So that's kind of like I don't want to say the shadow, but that's kind of like his umbrella that he's hanging his hat under, is that the AI revolution is going to be deflationary, which should be, I think, positive for the overall market, right? To have kind of like a deflationary aspect in the market. But in Canada, to your point, again, the last couple of weeks, more and more than ever, I'm having the conversation about variable and about that option because the fixed rates are just still too elevated. And I think based on the bond rates, as you said, being at 3%, they were at 3.4 and rates were still around where they are today. So we've seen that come down almost 0.5% now, and rates have come down, maybe 5 basis points, 10 basis points in some cases. So I think we will see, after there's a bit more maybe calmness in the market and things have flattened for a week, maybe we'll see lenders feel comfortable kind of dropping that rate. But I think right now it's just same with the oil and gas prices at the pump. I think there's kind of this uncertainty, as we've seen that, the war has ended 25 times now, right? So like, I think there's kind of still this feeling of, is this real? Like, are oil prices actually going to stay where they are? Are we actually going to see things calm down a bit? Or is this just going to escalate again at the end of the week and we're back to where we were, So when you're seeing oil prices go from 70 to 115 to 90 to 77, it's just, there's so much uncertainty. The markets don't move like that normally. So I think there's a lot of uncertainty, and I think that is creating a lot of confusion. And when people are confused, they just don't act, right? Like most people just kind of wait and see. So I think after today and after we hear what the expectation is and what they're projecting in the US economy, I think then we'll have a better understanding as to what's going to happen here in Canada and how that'll impact bonds and rates and everything else.
Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal.
So I think we're in a wait and see game right now. And that's kind of the feeling I get with a lot of clients. There has been a lot of purchases happening, but we know we're heading into end of June, school's ending, exams are in session. People are kind of thinking what's next for the summer. But for me personally, I actually think that's a really good buying opportunity. Same as we talk about December, January, the market's a bit slower, good time to be a buyer. I think the same for the summer. Like, if you're looking to buy homes, that's when there's not as many people out shopping, and you can sometimes get a really interesting price point on homes of people that maybe have to sell or, have a closing in September and it's pursuant to them or conditional upon them selling their home, so you can kind of get some good opportunities. I had a funny question this week, Dave, from a client that was actually referred to me by a realtor, and we were having a kind of initial conversation. And the question they asked me was like, what do you even do? Like, it was kind of funny because we just kind of assume that people know what we do, right? Like, it says, oh, well, he's a mortgage broker. But I think people understand insurance brokers. Like, we've been using them for years. I think mortgage brokering is still, at least for someone who's a first time buyer, is still sometimes just, it's like another language to them, right? It's like, oh, you're a mortgage broker. They don't really know. Oftentimes they call, oh, I spoke to the mortgage broker at TD, or I spoke to the mortgage broker at RBC. Like, they think you're just someone who handles mortgages. So for anyone listening who doesn't quite know what we do, Dave, maybe just let's give them a sip of the fire hose. Like, how would you, if you're asked that question, what do mortgage brokers even do? Like, how would you answer that in simple terms?
So to start off with where mortgage brokers, before I get into how we operate, mortgage brokers make up over 50% of the mortgage volume. So purchases, refinance, renewals in Canada versus the branches. And branches include walking into a branch and that mortgage person that a branch might refer you to. They work specifically for the bank. Some banks, mortgage brokers make up over 60% of their volume. And first-time home buyers, it's over 70% use a mortgage broker. Now, what is a mortgage broker? We're completely independent. We are not tied to any specific bank. We typically work with over 40 different banks, from your A banks, your Schedule A banks, like your TDs, your Scotias, BMOs of the world, to credit unions like your Meridians, your Desjardins, Alternas, to mortgage-focused banks. So these are banks that operate solely through online and phone banking and focus solely on mortgages in Canada, that are only available through somebody like Paul or myself. They are, in a
Only
lot of
through
cases,
Dave and I.
yeah,
Only available through Dave and I.
Are typically, they are the same, in most cases, the same classification as a TD or as a BMO, but solely deal in mortgages. We work with our clients from everything from that initial phone conversation, working with them as they're out home buying, with their realtor, with their lawyer, all the way from that initial conversation, not only to closing, but beyond, and being an advocate for that client to find them the best rate, the best product, the best situation for them amongst any bank. So we're looking at all the different rates and products and terms, knowing that each bank doesn't offer the same thing. You can have an RBC doesn't have the insured self-employed program. So, CMHC, Sage, and CG, they don't have that. They don't use that insured self-employed program. Similarly to TD. Mortgage brokers know which institutions offer that program, or that will use, if you have an existing home and you have a HELOC on a secured line of credit with a limit of $100,000, it's at zero balance. A mortgage broker will know which banks are going to treat that on your qualifying in the next home as if it's maxed out, or treat it as the balance outstanding. Each bank has different products and different ways in which they also underwrite their risk. And so a broker, we touched on it last week, but mortgage broker that has experience, knows their underwriting policies, will be able to, you might be declined from one bank because you walked into a branch and that branch just doesn't deal in that product, or they don't underwrite in a certain way because of their own internal risk, doesn't mean you're declined at a major bank. Like, a mortgage broker is able to work with you to find that best solution, best product for you. And sometimes that means just it's a different bank, a different A bank that is able to tailor with you. And then we also work with alternative lenders. So these are Alt A. So these are, where we have different programs accessible. I think we talked on before about self-employed programs or ratios, extensions, things like that.
Yeah, and we actually have a guest next week, Dave, coming from one of our mortgage investment corps. He's going to be amazing. He's going to be able to talk to us about kind of a more specialized financing, construction financing, which has been getting asked about more often. So I'm very excited to have Derek Sarah on from Westboro next week. I think the biggest difference, having worked at the bank level and as actually starting as a mobile mortgage specialist at a bank and then becoming a broker, I think the biggest difference that I hear from clients and just from testimonials and feedback and so on is two things really stand out. One is the responsiveness, right? Being available at 8 p.m., Sunday morning at 10, they're going to see a home, they're stressed out. Monday morning at 8 o'clock, they just put an offer in, they don't know what to do. Like, we're available, right? If you're dealing oftentimes with someone at the branch or at one of the mobile specialists, you might not be able to get a hold of them for days, or they might, like I've heard clients say, I haven't heard from my guy in a week. It's like, there's no world where a mortgage broker isn't getting back to you in a week. You know what I mean? Like we want to serve our clients. The second piece of that is the advice, right? Because we have such a wide multitude of lenders and so many different programs, the advice is much more tailored to your specific needs, right? As an applicant, as a client. So if you go into a hardware shop and all they have is hammers, well, you know what? Everything's a nail, And if you go to a hardware shop and they have every tool on the planet to do your job, well, you're probably going to be more effective and get a better solution for what you need because they have more than one hammer in stock. So I think that's the biggest difference for me is kind of the advice and the availability. And like anyone can get you a rate, right? You can go online, you can get a rate, you can go to the bank, they'll give you a rate. Like rates really it is obviously important, but and not all rates are created equal, but ultimately, if you can get a 4.3 or a 4% or 3.7 somewhere, you can probably get it somewhere else. There's always that one off where there's one lender that's, like you said, really looking for market share and they do something wild to drop their rate or offer some incentive that nobody else can match, but that doesn't happen that frequently. It's typically lenders are all around the same. So if you're a client, you want to get the best advice, you want to get the best service so that the process itself feels seamless, right? And that's kind of the term we often use is we're going to make this seamless for you because of that experience, because of that knowledge. We're able to give a more tailored solution, but also just better service overall. The other thing that I'm hearing more often, Dave, especially in this market where we have a lot of people that are buying and haven't sold yet, we're stuck in this market again where people aren't sure if they should be buying first, if they should be selling first, like what the pros and cons are to both. Could you touch on maybe just quickly, like pros and cons of buying first and selling first? And like in this market, in this climate, what do you think is best if you had the option?
It's a long-winded answer as well, and I kind of
Yeah,
defer as
keep
well.
it short. 10
Yeah.
minutes. Yeah,
No, but I
we'll
defer.
get to
I
it.
would defer to the really at the end of the day, I would defer to the realtor they're working with in that area that knows that market for what's available for a product to buy and what's available and how quickly things are selling on the sales side. Every area of the city is different. Some areas still will sell within a week. Other areas where property is sitting. So it is specific on an individual property because it also matters how it shows and all that. One thing I will say is that, and I got an email from a client right before coming on here that they're a military relocation. They have a property that they've already had that closes in August, and they don't have, like, their houses in Ottawa is for sale. They don't have a sale agreement yet. They emailed me and said, hey, I think it's about time we start discussing what our options are of converting this to a rental and pulling the equity out that we need for that purchase that we're already firm on. Going back to, what we were touching on before about mortgage brokers and solutions that we're able to provide is just that, tailored solutions on a given scenario and not kind of just pigeonholing you or saying like you're screwed, you got to go elsewhere, or just kind of leaving you with no options. So whether you buy or sell first is also dependent on where you're buying and selling.
Yeah, and I think at a higher level, just like for you as the person buying or selling, I think obviously the benefit of buying first is you have that, whatever it is, 7, 14, 21 day window, however long it is, 30 days, to actually get your stuff into the new place, settled and so on, and then have your current home sell. So that can sometimes be easier just because you're not dealing with, you sell today and you buy tomorrow. Well, now you got to take everything from your home, put it into storage or put it in a moving truck, wait overnight, bring it to your new house, drop it all off. Like, it's definitely logistically a bit harder to sell and then buy as far as the actual closing dates, right? Now, as far as to your point, I think if you find a place that you absolutely love and you need to put an offer on it, put an offer in, but make the closing date 4 months out, and then you have a really long runway to list your home, get it prepared to sell if it's not ready to sell, which I hear often. Realtors are like, yeah, we're going to buy, like, but what condition, like, is your place ready to be listed? Like, where are we at on that side? Because if you need to put a sign on the lawn tomorrow, is it in a position to do that? Or are we going to need a week to stage it and do some painting and so on? So there's, to your point, like, consult with your real estate professional, ask them what they think. But ultimately, for most clients, it's very common to buy first, like the closing date, move into your home, and then sell afterwards. And in those cases, most lenders are going to offer you what's called a bridge loan or bridge financing. So they will essentially advance you your down payment from the future proceeds of sale when your home sells. So you have the money for your down payment to buy the new home, and then you pay interest for, let's say, 21 days during that time frame until your current home sells. And then when your current home sells, the new lender takes that money back that they advanced you. So you kind of have like a short-term loan with the guarantee that your home's selling to give you the money for your down payment. So a lot of people worry like, oh, we have to sell. We need that money to actually buy this new place. But there's things in place to allow us to help you kind of bridge that gap, right? And that's where the term bridge loan comes from.
As long as you have that firm sale, though. Like
Firm
it needs to
sale,
be an
yeah.
unconditional sale. So one in which all the conditions have been waived. That's the only way that any institution will provide bridge financing. So if you're a home buyer or seller that's listening to this, or you're a realtor and this is not something that you're aware of, you can have an offer, but a conditional offer is still not going to allow for somebody to get bridge financing. So having that conversation up front of strategy, if you're buying first and then listing, like you said, setting that closing date even 4 months out, make sure that the person you're working with for that mortgage has given you the backup scenarios of, okay, well, what happens if it doesn't sell? If we're a month out from closing and there's been no offer, what are our options? And make sure those are discussed prior to waiving your conditions on that purchase so that you're aware that you can actually qualify, that you have other options. Because otherwise, like if you come down to a week before closing and you have no options, like it can be a real tough scenario because you start having to get into private financing, which becomes costly.
Yes. Yeah, that was the other thing I was going to say is that like there are situations where people are free and clear, like they don't actually need a mortgage and they might even be downsizing. So they're selling their current home for, $700 and buying a new home for $600. Well, if you don't have a mortgage, then like you technically don't need like that. There's no lender to advance you the money for the bridge loan. So, if you have to go get a private bridge loan to cover essentially the full cost of that purchase, it can be very expensive to your point. You're talking fees, larger interest rate. It's not ideal, but it is possible. And honestly, in those situations, it depends on how important it is. I had a client, I'll give you kind of a brief real life scenario. I had a client who had horses and they had a stable and they were moving into a new position, a new house, but their house was free and clear and they were downsizing. So now they're moving to this property with acreage and with a horse barn and everything else, and they had to transport all the animals to this new location. So they had to buy first. Like they couldn't wait and just have the horses in the street waiting 2 days to get into the new property. Like they had to close first. So in that case, they had no choice. Like they had to pay a really large expense to get that private financing because there was no other options. And they were kind of surprised to hear that. Like they're like, there has to be options available, but ultimately there isn't, because the bank itself, the bank typically that's lending you that money for the bridge loan is also getting another 3 to 5 years of interest and everything else from you. So there's kind of like a built-in understanding that like, yeah, we're going to advance this because we're also going to be working together for the next 5 years. But if it's a 1 month short-term loan, as we know, like rates are directly related with risk. So if it's way riskier and really short-term, the lender themselves has to make it profitable and worthwhile to lend out that money for 30 days, right? And they're not going to do that by making 4% interest. They have to charge a fee. They have to charge higher interest rates so that it's beneficial for them and provides a solution for the client.
Yeah, no, agreed. It's pretty hard when people don't have a mortgage and they place free and clear. It can be very confusing as to, why wouldn't I be able to get financing on this? But, well, Paul, I think on that, we get into the mood boost.
Yes, David, it's World Cup time. England plays today. I'm hoping when people listen to this tomorrow, England and Colombia. I'm rocking the Colombian national jersey here. Hopefully they both win today and we have a great go England. So I got 3 World Cup mood boosts, Dave. That's my point here.
Let's go.
Here we go. Number 1. Why is Cinderella so bad at soccer? Because the coach was a pumpkin. Coach was a pumpkin. Yeah. Number 2, what did the bad soccer announcer get for Christmas? Coal!
Oh, wow. That's so bad, but so good. So bad, but so good.
And number 3, what kind of tea do soccer players drink? Penalty!
Okay. All right.
Penalty. Yes. Soccer, World Cup, go England, go Canada.
Go England.
Go Go whatever country
Actually,
you're listening
yeah,
from.
and Canada tomorrow. Let's
We're
go.
rocking. Thank you, everyone. 10 o'clock every Wednesday, and we'll see you next time. Have a great week.
Deuces.